Back in October, I did a walkthrough review of InvestEngine, the commission-free investment platform that is really shaking things up in the UK investment scene. It's been 6 months since that video, and I want to provide an updated review, going through my experience and my portfolio 6 months on, whether I still love the platform, and going through what's changed with InvestEngine, as a lot has changed. So just to rewind, for those who didn't watch the last video, or for those who watched the last video and just want to recap, InvestEngine is a two-part platform. Firstly, there's a DIY portfolio part of the platform where you build and manage your own portfolio through buying and selling ETFs for free. On this side of the platform, there's no platform fee. All you pay is the ETFs annual fund management fees, which start out around 0.05% and average out at 0.25%. And you would pay these fees on any platform to access the ETFs. So overall, this part of the platform makes investing incredibly cheap. The other part of the platform is the manage for you robo-investing option. Here, InvestEngine builds and manages a globally diversified portfolio for you based on your risk appetite and investment aims. And how InvestEngine determines this is through information you provide through a short survey, a short questionnaire about your risk levels and aims for investing. And from that, InvestEngine will build a portfolio to suit your risk appetite and investment aims. This part of the platform has a 0.25% platform fee, but that's still pretty damn good when you compare it to other robo-investing options, and we'll go through that later in the video. For both options, InvestEngine offers ISA accounts, non-ISA personal accounts, and business accounts. And it was the manage for you personal account option which I chose when I opened an account 6 months ago to test the product out. And it's worth saying that within the manage for you option, there's two portfolio options. Firstly, growth, aimed at increasing the value of your portfolio, and secondly, income, aimed at providing you regular income through investing in bonds with high returning coupons and stocks with high returning dividends, of course, all within ETF wrappers. I chose growth as, given my age, there's not too much air here. I'm still fairly young. I'm less concerned about dividend income and more concerned about growing the value of the portfolio. So let's take a look at where my portfolio is now. Since I opened the account 6 months ago, I've been drip feeding in small chunks, and of course I took advantage of a sign-up offer with InvestEngine, which at the time was you get £75 free if you deposit £100. You can see my portfolio is up 4.45% over those last 6 months, which is not too bad considering it's been a difficult few months in the stock market. And to put this return into some sort of context, the Nasdaq Composite, which is one of the major stock market indexes in America and includes a lot of the big tech companies, only increased by 0.04% over the last 6 months. Although it has to be said, just to provide a completely balanced view, another major American stock market, the S&P 500, another major index, did increase by 5.71% over that period also. However, it is worth remembering again that return of the S&P is the return if you invested 6 months ago. And the difference is with my portfolio is that I've been drip feeding small chunks in, as you can see with this graph here. I didn't all invest it in on day one. You can see with the blue line, I've been drip feeding in small chunks over the last 6 months. And that return also doesn't take into account the £75 bonus sign-up offer. So overall, my return over the last 6 months, given the market conditions, has been pretty good. And you can see on this screen as well, there's a number of neat features. So you can see the projections, based if I carried on investing as I did, you can enter a monthly amount. So let's say I'm going to put in £100 every month. What would the portfolio likely be in 10 years time? You can see here, best case, medium case, worst case scenarios. So it gives you a lot of good projection information. And you can also see from my portfolio the exact allocation, the exact funds my portfolio is invested in. So you can see 72.7% of my portfolio is in equities, 21.3% is in bonds, 4.8% alternatives, which is basically gold. It is only gold, you can see, and I've got 1.08% as free cash. And I can see the exact funds invested in as well. And one thing I really do like about InvestEngine, a new feature, is the ability to dig even deeper with analytics. And this wasn't here last time I did a video. So you can go on options, analytics, and dig quite deep into the portfolio. So you can see the regions you're invested in, the sectors, the holdings, the asset class. So I can see here my biggest exposure is to North America by quite a large amount. My biggest exposure in terms of sectors is the industrial and technology sectors. And you can actually see your exact holdings for equities too, which is pretty cool. So I can see I've got 3.1% invested in Apple. I can see the number of holdings in terms of my stocks of my portfolio I have, which is 6,778 holdings. And one thing which is really neat about InvestEngine's analytics is that you can see whether the portfolio is meeting your specifications you selected when opening the portfolio. So it shows me whether InvestEngine's robo-investing algorithm is doing a good job at maintaining the preferred portfolio mix of your risk tolerance and investment aims. So I can see the actual amount invested in Apple is 3.1%, and the target amount based on my investment aims, my risk tolerance, and that portfolio mix which InvestEngine has suggested is also at 3.1%. So InvestEngine is doing a good job at maintaining the preferred portfolio mix. And if I go to asset class here to see how well InvestEngine is doing at maintaining my preferred mix of assets based on my initial selection, it's doing pretty well. There's only a tiny marginal difference in terms of the target and actual amounts. You can see 72.4% is the target amount for equities, the target allocation, and 72.7% is the actual allocation. So the algorithm's doing a pretty good job for InvestEngine in terms of that robo-investing algorithm maintaining my portfolio. And this leads me nicely on to my favorite thing about the managed portfolio option, and that's automated continuous monitoring and rebalancing of the portfolio. Rebalancing is essentially the process of buying and selling portions of your portfolio in order to set the weight of each asset class back to their target allocations. And this is needed as some securities and assets will grow a lot more or a lot less than others in your portfolio, which means that their weighting in your portfolio is either higher or lower than it should be based on the portfolio mix initially selected. Rebalancing will help you stick to your investing plan regardless of what the markets do. And this is something I do myself on other DIY investment platforms and apps such as Trading 212 and Free Trade. I spend a lot of time trying to ensure my portfolio keeps the balance I want. But through InvestEngine, you don't need to spend that time. It does it all for you, and that's the benefit of paying the 0.25% management platform fee. InvestEngine does it for you. You can see if I go to my transaction history at the top here, consistent buying and selling of stocks to ensure my portfolio remains balanced. So InvestEngine will sell the assets that have appreciated and add those in which have declined. So we'll top up the stocks which have declined in value. And how this works is through tolerance ranges and triggers. So each ETF position within your portfolio has a tolerance range in which the value of that position can either go up or it can go down. And if the value of the ETF breaches that range, so if it goes outside of that range, then a corrective buy or sell order will be triggered. So you can see here on the 10th of January, a number of sell orders were triggered. So obviously a number of ETFs must have increased in value outside of that range, triggering sell orders. And this is one of the key selling points of the Manage For You option, the Manage For You portfolio. It's so low touch in nature. You can even set up monthly automatic top-ups. And this means that you can literally just sit back, pretty much do nothing, and let InvestEngine make your money work. So overall, for this portfolio, I've been relatively pleased with the growth, relatively pleased with the features on offer, relatively pleased with what I'm invested in. Obviously, I would have preferred a bit more growth, who doesn't, but it's been a challenging 6 months in the stock market for obvious reasons. So I'm excited to see where this portfolio goes in the future. In terms of the wider platform, a lot has changed, but I've also kept all the best things which are inherently good about InvestEngine. So from the outside, it seems like InvestEngine's gone from strength to strength over the last 6 months. The first question you might have, well, is it still the cheapest investment platform in the UK? And my answer to that is, as far as I'm aware, it's the cheapest way to invest in ETFs. I haven't seen a platform, either DIY or robo-investing, as cheap as InvestEngine. Their DIY portfolio service is free. There's no setup, dealing or annual charges. The only costs relate to the exchange traded funds that you invest in. And you can see here how the costs of InvestEngine's DIY investment option compares to other DIY investment platforms. It's by far the market leader. And one investment platform which is not on this table in Trading 212, it has traditionally been seen as the cheapest way to invest in stocks and shares in the UK. And even that has a 0.15% FX charge, which InvestEngine doesn't have. And it's also the cheapest way to invest from a robo-investing point of view, as far as I'm aware. You can see here how they compare to other well-known robo-investing platforms. And they're by far the market leader here too. So InvestEngine overall is still the cheapest way to invest in ETFs, as far as I'm aware. And this is probably one of the key reasons why InvestEngine is really growing. Its name is getting out there, and it's recently been recognised in a number of industry standard awards. It was recently nominated for the Best Investment Provider, Best Newcomer and Innovation of the Year at the British Bank Awards. However, it is worth also pointing out that it's still a relatively small platform. It has just over 30 million of assets under administration and 6,000 customers. But that's growing very fast. Its customer base is growing at a rate of 30% per month. So 30% month-on-month growth in new accounts, which is extremely good. And they've also just launched a crowdfunding campaign which will help propel that growth even further. And I have no doubts, given it's a market leader in terms of cost, it's got very good options for funds, and the UX is very good, and they're also building a great community. It's going to grow even faster. The customer base will grow, and I imagine a large percentage of those new customers will be opting for the DIY portfolio option, as that is the cheapest way to invest without the management fee. So we've also got to look at what's changed here. A number of new features have been added on the DIY side, such as smart top-ups and one-click rebalancing to help you stick to your investment strategy. But it's the increased number of funds and the quality of those new funds which has really impressed me. They've now got over 510 ETFs to choose from on their platform, and that figure has increased a huge amount since I last did a video 6 months ago. And that point in time, there was around 150 funds on the platform, so they've really got to work in increasing the number of funds. And that was one weakness I did identify in the last video in terms of the number of funds on InvestEngine compared to other investment platforms. They've gone a long way to improving that. However, for those who want to stock pick, this is still not the platform for you, as there's still no individual stocks, and that's not the path InvestEngine are going down. They're very much focused on ETFs, as they want to become the place for ETF investing, and there's very good reasons they've chosen this approach, as ETFs are inherently low cost, diversified, and provide accessibility to invest for the vast majority of people who simply don't have the time or the knowledge to stock pick. Plus, a lot of people would argue that ETF investing is a better method of investing, as they would allude to plenty of research out there that shows that in the vast majority of cases, investing in index funds or ETFs, which track overall market returns, will outperform active investing, where you stock pick and try to beat the market in the long run. So something to consider there, even if you are an individual stock picker at the moment. And one thing which I've really liked about the ETFs InvestEngine have been adding is they're good quality. There's a lot of funds, as you can see at the top here, which are from the big asset management firms such as Vanguard. You can see Vanguard's FTSE Developed World Fund there. And the crazy thing about Vanguard funds on InvestEngine's platform is that it's cheaper to invest in Vanguard funds through InvestEngine than it is through Vanguard's own platform, because you're not subject to Vanguard's platform fee of 0.15%. They've also added a number of ESG funds, which is extremely topical. So I type in ESG here, you'll see a number of ESG funds pop up, and this has become extremely popular as a lot of investors are currently designing investments to reflect their wider ethical beliefs. They've also increased the number of commodity ETFs. They did this just a few weeks ago. The community were asking for more commodity ETFs, and they added 16 commodity ETFs, a further 16 commodity ETFs just a couple of weeks ago. And they've also added some nice pieces of functionality on the ETF research side since I did the last video too. So if you click on an ETF such as the iShares S&P 500, you get a much better breakdown of what's in that ETF. So you can see here the holdings, the regions, the sectors. This wasn't there before, and this kind of breakdown is extremely useful when choosing the right ETF for you. And another thing which is extremely useful, which they've added since I did my last video, is two little features at the bottom of each ETF here. Firstly, it lets you know whether the ETF is accumulating or distributing. Accumulating whereby the ETF auto-invests any dividends, and distributing where, as you guessed it, it pays those dividends out to you. And it's also very clear here any fees charged by that ETF. What's the underlying annual management fee for that ETF? And the total expense ratio is stated here. So for the iShares S&P 500, you can see the total expense ratio, the fee is 0.07%. So it's extremely clear in terms of the fees for the funds. And there's massive improvements which has gone on there in terms of the research side of the ETFs and making it clear on the fees. So there's a lot to like with the improvements they've made over the last 6 months to the number of funds, to the UX, to the functionality, the new features. And they've made the product even more accessible too, with an even better mobile app. You can do all of this functionality on the mobile app. I won't go through this on this video, but maybe another day. You can also now invest in the ETFs from as little as £1, which is great. And this works because they allow fractional investing, which means you don't have to buy a full ETF like you do on some other platforms. You can just buy a small chunk starting from £1. However, it is worth pointing out that, of course, there's still functionality I would want, some other people would want, and the thing which is top of my list is real-time portfolio updates. At the moment, the value of your portfolio is only updated twice a day. However, that's, I'm sure, on their tick list for improvements in the future. And nevertheless, the platform overall is great, especially given the costs compared to other platforms. The last thing I want to go through is something which is really promising, and that's the fact they're building a great community. As I said before, they've got over 6,000 clients at the moment, and that's growing 30% month on month. And they've got a community page which is really active. InvestEngine do like to engage with clients, and that's built a community, and I think that community is going to be really powerful in pushing forward InvestEngine in the future. You can see how well engaged InvestEngine is with their clients through questions like this and openness to the questions. An individual from InvestEngine, a real life person, you can even see their image, responds to an individual who asks, so I'm really enjoying the platform, but what's next? And InvestEngine come back and say, there's loads of exciting things that are happening. We're updating our app. We're adding several new ETFs. They're also introducing shared portfolios. They're also auto-investing. They're also looking at SIPs. All this great stuff. They respond very honestly and openly to the client. And this is what helps build a community. Honest, transparent communication with client bases and regular communication at that. People in this forum regularly ask for certain things to be added as well, specifically certain ETFs. And InvestEngine get back to them, add those ETFs. It's a great communication method and a great way to build that community who then talk to others about the platform, are almost ambassadors, and help grow the investment platform further. So I think that's going to be really powerful for InvestEngine in the future, that community. So overall, I'm happy with my test experience 6 months on. And although the company is still at an early stage, it's still a new company, new platform, it is fully FCA regulated, and your funds are protected under the FSCS scheme up to 85k, of course. And given my experience and given the regulation and protection, I have decided that going into the next financial year, I'm going to use InvestEngine as my stocks and shares ISA. I'm going to use the DIY option and choose the ETFs of my liking, suited to my risk appetite and aims. However, InvestEngine won't suit everyone. I know that. Those who want to stock pick can't do it through InvestEngine, so it doesn't suit everyone, and please do your own research if you're thinking about this platform. But for me, it ticks my boxes, and I'll be using them as my stocks and shares ISA for the next financial year. And on that note, thanks for watching.